Hi there. Let me show you something very interesting. Mullen Automotive has 10 million in market cap. As you can see here, market cap 10.5 million. And then you look at the news, what Mullen announced, a major deal in Dubai up to 210 million. This is quite a lot compared to their current market cap of only 10 million. So, when you compare their market cap of only 10.5 million to this major deal, you can see a huge difference, 20x. The market cap to go from 10 million to 210 million, more than 20x. And the question you should ask is, if the stock price can do the same thing, to go from $5 or almost $6 to more than $100, to have 20x on your investment, as they announced this major deal in Dubai. If they can deliver their first units to Dubai, and maybe they can get more contracts, major deals like over 100 million or 200 million, then for sure the market cap will go up a lot. Because the revenue in the long term will increase. Now, what's the catch? Because if you look at the stock price, year to date, you can see that it's down over 99%, 99.5%, almost 100%. And why is this? When they announced this major deal over 210 million. And besides this, another great news is their first customer for their B4 electric truck in Michigan for their subsidiary Bollinger Motors. So another great news. They're about to expand in Dubai and also to deliver the first truck in the US, Michigan. But why the stock price keeps going down? A decline over 99%. Why is that? Well, when you analyze a company, yes, you look at the news, their opportunities, what they can deliver in the future, and that's great. They have great tailwinds from the EV industry, plus they sign new deals, or they are about to sign new deals, and everything looks great for Mullen. But you also have to look at the fundamentals, which are the most important. So, let me show you. First, let's start with their balance sheet and look at their cash and cash equivalents position. You can see that Mullen had about 155 million in cash last year, 2023. A lot of money, right? Compared to their current market cap of only 10.5 million. But now, that cash position has decreased to 3.5 million. They spend a lot of money. Of course, they have to do that because it requires a lot of capital. Their business requires a lot of investments in infrastructure, and that's why they are burning a lot of money. So, the first thing, their cash position has decreased a lot. And if you look at the other assets, yes, you might see some inventory of over 47 million. And this is quite a lot compared to the current market cap, so almost 3x. But you know that if you want to invest in a business, don't bet on inventory or intangible assets. Focus on the real cash and other important assets. And then if you look at the other assets, you see nothing. Of course, you might see that property, plant, and equipment, the land they bought, if they have some land, which is worth over 83 million. And if you can rely on that, and look at the current market cap of 10 million, yes, you can have 8x on an investment. But don't rush. Don't bet on something that you don't know. Focus on the important things. And of course, you also have to look at their liabilities, which are over 100 or almost 140 million. So you have to be aware of their balance sheet. It's not great. It doesn't look quite great. Their cash position has decreased a lot from 150 million to 3.5 million. So be aware of this. Second, let's look at the revenue. You can see that they reported the results for June 30th, this year 2024, and you can easily see a drop in the revenue compared to the last year 2023. The revenue was over 300,000 in 2023, and this year the revenue has declined to 65,000. So a big drop in the revenue. This is the first thing why the market cap has declined so much. This huge decline over 99%. Second, yes, you can also look at their losses. They have reduced a little bit from a loss of over 300 million to a loss of 91 million, but it's still a lot compared to their revenue. I mean, they are making $65,000. You can easily see here. But their losses are over 90 million. And this is huge, quite huge. Now, besides their huge losses, there is something more, something very important, and that is the number of shares. You can see that the number of shares has increased from almost 300,000 from 2023, as you can see here, 2023, they had 277,000 shares. But now, in the last quarter, 2024, they reported over 12 million shares, the number of shares. And this is huge, quite huge. And maybe you know what dilution means. When a company starts issuing a lot of shares, you see more than 2x, double, triple, or 10x, in this case, even more than 10x, the stock price is likely to go down in the long term. And that happened, as you can see here. The stock price year to date has declined over 99%. Why is that? They needed more money because of their huge losses. As you can see here, a lot of losses, over 300 million or 800 million, almost 1 billion in losses. And they needed more money because banks don't lend money to unprofitable companies that have a high risk, and they have to find a solution. And the easiest way is to issue more shares. The problem is that the investors get burned. As you can see here, a decline over 99%. And they'll continue. I mean, what to continue? Because at the current market cap of 10 million, if they issue more shares, I mean, they double the number of shares, they can raise a lot of money from the public market. They have to find other lenders. I mean, to get the interest in MULN, the real assets. But the bad part is the retail investors get burned. Nobody cares about them. So, even though you see those great news, yes, the stock price may react in the short term. They may announce a new deal over 200 million, maybe in Europe, who knows. But be aware that there is a lot of risk with this company, especially dilution and the business risk. They might not become profitable. And if they don't become profitable, they continue to report those huge losses, they are likely to go bankrupt. This is the risk. So you can look at their news, other videos on YouTube that they say MULN will go up 10x, 20x, or 100x. But be aware of the risk. Look at the fundamentals. Understand the business, the industry. And then, after you know the risk, then look at the reward and assess if you want to take this risk, this huge risk. From my point of view, MULN Automotive is a risky investment. If you want, if you believe in its future, as you can see pre-market, the stock price is expected to go up 3%, then you may take advantage and invest in this company if you like it. But as I said, the risk is quite high. They might go bankrupt. So be aware of the risk. And then you can do whatever you want. And if you have other questions about this company, please let me know in the comments.